On the podcast this week, are you doing management accounts the right way? Well, today we give you 4 steps to the most powerful management accounts. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6- and 7-figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant, and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow, and grow your business.
You said something really, really interesting to me the other day, and I've never really thought of life like this before, but you commented on what was in your word cloud at the moment.
Oh, yeah.
And
how I live my life through my word cloud in my head.
Yeah, and I just really love that concept because I think it can really help you get a bit of clarity on what's going on, not just from a work perspective, like from a life perspective. I absolutely loved it.
I've just come up with some new concept. Do you want to explain to people what happened and what this means? Because they'll be like, what you want about?
Oh, we were having a domestic, weren't we? And you said, I don't really understand why the word divorce has entered my word cloud for the first time in 15 years. But no, it's all fine. We are not getting divorced at all. It's not even on the horizon. But yeah, it's just a really interesting concept to me. And it got me thinking about what words would be in my word cloud. So it's something that I would be working on over this Easter break, I think, jotting down what my word cloud would look like.
Yeah, I always think like I kind of lived my life with this whole thing. So like, in the last week, imagine that your whole life, you created this word cloud your whole life. What would be the key big words in that week? And therefore, you know whether your life's really consistent or whether something new's entered it. And you're like, oh, last week, this word came up like loads and loads and loads. It's never come up before in my life. And all of a sudden, that's like a poignant thing. It's like, yeah. I mean, you made me feel like I'm a bit weird, but like I live my life through a word cloud. But it's a good way of getting clear on what's going on in your life, isn't it? I reckon. But
it definitely is.
Anyway, well, we've just got back from Malta as well, haven't we? Which was a nice little break.
Yes, that was definitely in our word cloud. Rabbit was in our word cloud a
Russian
lot.
massage, that was in my word cloud for last week. Didn't have one, but it seems to be the big thing out in Malta, didn't it? And of course, Donald Trump tariffs, that's in the word cloud for last week. But we're not covering anything on tariffs. So I've got no interest in it whatsoever. What we are going to cover is something really, really interesting in this week's news story of the week. So my news story of the week this week is 70, Claire, is the new 50. Boomers can keep working. Yes, this is a global financial agency that has basically ran a cognitive study that says today somebody aged 70 has the exact same cognitive function as somebody aged average 53 in the year 2000. So that's just 25 years ago. A 70-year-old has the same cognitive function as a 53-year-old in that amount of time.
So what we're saying is you keep your marbles for longer. You used to lose your marbles at 50, now you're losing your marbles at 70. And
yes.
So they're claiming that this means that people can work for longer.
Yes. This is interesting because your initial response to me was, but what about your physical fitness? Because you physically can't do it. And I think that's kind of been covered though, isn't it? Because the physical element is the reality that people are living, we know people are living 20, 30 years longer than they were, 30, 40 years ago. So the physical aspect's been ticked because we're physically living longer. This now ticks the mental box. It says, actually, we are cognitively able to be very, very stimulated till, the age of 70 and very capable. And we had this the other day where we were trying to work out how old Alan Sugar was on The Apprentice, didn't we? And you were like, actually, we probably got it out by about 8 years in terms of his age.
I think that's a 72.
78 years old. And you think that guy, absolutely, still fairly sharp, not showing much sign of, wobbling at all in his brain. And I think what I think is interesting about this in terms of the studies that obviously we read so much like doom news about how people can't save for their pension anymore. People can't, they're not going on the housing ladder till 10 years later than they used to, and all these different things. But nobody ever really writes a proper comprehensive piece that puts everything into perspective. Because actually, if, and I guess the irony, the issue we've got is that we're forcing or trying to force that retirement age to remain the same. So therefore, we're going to end up spending half of our working life in retirement and half of our working life in work. Whereas when retirement originally was invented, it was like maybe your average retirement was 5 to 8 years long, something like that.
I'd be really interested to understand what the difference is that's actually driving that. Because even at the age of 53, 25 years ago, however long the study was comparing.
Year 2000.
So in 2050, the vast majority of 53-year-olds were still in work.
Yeah.
So
yeah.
Are we saying that work isn't the stimulating factor that keeps people's brains healthy? Is it something different? Is it using social media? Is it, I don't know, like some of these, you get these brain training apps on your phone now. Like, what is it that is really driving this increase in the age so people keep their peak cognitive function for longer? I think it'd be really interesting to understand that.
I guess in many ways, I mean, like the simplest form of explanation to me isn't the cognitive bit just linked to the physical bit anyway? Like, why wouldn't the two move in line with each other? I'm not suggesting that this story says, oh my God, it's a real surprise that we're living physically 20, 30 years longer, but our brain is exactly the same age it was before. Well, it seems a bit like, obviously.
Well, we know so much that physical health is the driver behind mental health, actually. Like a lot of people, I think it's no wonder that there is a mental health epidemic happening at the moment because physical health is just so poor in so much of the population at the moment. But yeah, it's definitely, physical health increases your mood, increases your well-being, increases your ability to think clearly. So yeah, maybe it is a case of because our physical health is with us so much longer now that also our mental health is. But really interesting.
There's a couple of other interesting bits in here. Just they call this, the paper's called The Rise of the Silver Economy, which I thought was quite cool. And another stat here, this is about fitness level. Somebody aged 70 in 2022, because this was done in 2022 very recently, has had the same fitness level as the average 56-year-old 25 years ago. So actually, even in terms of fitness, that's sort of following a similar element. So maybe there's no story here at all. It's just like, yeah, you're physically staying longer. Oh, your brain's, moving up. Oh, your physical fitness is moving up. But it's politically challenging to push the retirement age up in line with that, which would actually deal with a lot of our challenges, wouldn't it, around, the funding the welfare element of the economy, which is the most expensive part. So,
but it's happening naturally. Yeah. I think anybody who owns a small business, if you've had that business long enough, you'd probably see an increase in the average age of somebody that's applying for jobs and things like that. Certainly if you think in bigger businesses are claiming that they're getting more applications for jobs from older people because they've just been forced into remaining in work because of how expensive it is to live now. And, the pension is just not really enough to live a comfortable, good lifestyle on, is it? So from that perspective, I'm not surprised that people are being forced to remain in work, and therefore this thing of increasing the pension age is sort of going to happen naturally anyway.
I mean, one forward 20 years, I certainly wouldn't be surprising that age was 70 anyway. So that's not remotely a surprise, is it? But it's interesting that we won't look like typical 70-year-olds. We'll be operating, like 53-year-olds are, 15 years ago. So it'd be very weird.
I find it bizarre because when I was, much, much younger as a kid, I would look at my grandparents who were in their 50s and 60s with like a blue rinse and sort of what I would class as like granny and granddad clothes and, sensible footwear and anoraks and things like that. And now I look at like my parents who are in their 60s and 70s and they wear trainers, they wear Doc Martens, they wear jeans, like they've got normal hair, like they've got iPhones. It's definitely a change in sort of what we now think of as an old person. Like that image is just completely not really relevant anymore. And that sort of blue rinse and the doddery old clothes sort of now relates to people that are in like their 90s, 80s and 90s, doesn't it?
Yeah, absolutely. Great. Well, fascinating story. So 70 is the new 50, and don't panic, all you self-employed people, about the fact you've got no pension. You're going to be able to carry on working for so much longer than you think. There's the silver lining.
That's not the plan, silver lining. It's not the plan.
I know, exactly. Great. Let's move on to this week's deep dive then, Claire. So this week, Claire, we are talking about the 4 steps to powerful management accounts. And you're talking Power Ranger level here, aren't you, in terms of management accounts? So tell me, first of all, Claire, why are we talking about this today? Why has this come up?
So when clients come to me, I can often fit them into 2 categories, essentially. People that don't have any management accounts yet, and they want to start management accounts for the first time. But what is more common is people come to me because they are getting management accounts, sometimes from a bookkeeper, sometimes from somebody internally or their year-end accountant, but they are not happy with the quality of what they're getting. They're looking at those numbers and they just know that those numbers are not accurate enough.
And just to be really clear in case anyone's listening, do we just need to touch on what are management accounts just at a really high level? Like, what are we talking about here?
Yeah, so a really high level management accounts are your accounts that you would typically be getting monthly. And as a minimum, they should include your profit and loss, balance sheet and cash flow.
Yeah.
But ideally, we would be talking about a reporting pack that has KPIs, performance measures in there, some graphs to understand really what is and isn't working in your business.
Okay.
So for every business, management accounts should be a unique format, exactly what your business needs.
Okay, perfect. So most, in today's sort of accounting software world, most accounting software, you can click a button and you can produce your management accounts yourself, can't you? And they'll just throw out a report and various other things. So is that enough?
Yeah. So for the businesses that come to me and they say, I am getting management accounts, but I don't trust the numbers. I look at them and there's questions that people can't answer or they can't explain to me why the numbers are what they are. 9 times out of 10, it is because somebody is simply clicking a button in a system that says run the management accounts or download a P&L. That is simply running a report. It's not actually producing management accounts.
Okay.
Because really, if you want management accounts, you need to expect a similar process to what you go through to get your year-end accounts. So when you get your year-end accounts, generally your bookkeeper does everything. You send all the information to your year-end accountant and they do lots of work. And only once that work is done do they produce accurate accounts. And it's exactly the same concept on a monthly basis too.
Okay, so I'm guessing you're going to take us through these 4, I guess, what are these, the 4 key steps that should be happening to prepare the most powerful management accounts that you can then use in your business?
Yes, absolutely.
Perfect. So should we start with number 1?
Yeah, absolutely.
Great.
So step 1 is simply you need to finish your bookkeeping.
Okay.
And so generally we suggest that most businesses should be aiming by sort of day 5 to have their bookkeeping completed. That would be all sales invoices on the system, all purchase invoices and expenses logged on the system, and your bank fully reconciled. We would suggest that's happening by day 5. If there's something unique in your business, which means it's not possible, you can drag that out a little bit, but I'd be really cautious about dragging that out too much, because the longer you leave that deadline, the slower your management accounts are going to be. And therefore, the longer your business is potentially running with issues in it, and or the longer your business is running where you're not optimizing things that are really working well and doubling down. And
what normally would different sizes of businesses be doing in terms of the frequency of it or the type of resource that they have? So, would they have an in-house bookkeeper, outsource? Would they be doing it themselves as a business owner? And would they be doing it every week, or would they just be doing it once a month? Or is there a best practice?
Do you mean for bookkeeping?
For the bookkeeping element, yeah.
So I would suggest for businesses of like a 7, low 8-figure business, you should be doing like almost daily bookkeeping. You should probably have somebody that is looking at it probably every other day.
Right.
I would suggest as a minimum, because of the quantity of transactions that you're likely to have going through the business.
Right.
So that would be the aim. Definitely weekly as the absolute minimum. You can't just pick up your bookkeeping once a month, because so many issues are found in your bookkeeping in terms of making sure that you're not paying people twice, that people are paying you on time. All of those types of things can't happen until your bookkeeping's done.
Okay. And I guess by doing it that way, you then don't have so much of a pinch point at this whole, like, get it done 5 days after the end of the month and various other things. Because really, if you've kept on top of it throughout the week, it should just be the last few of that week that you should be tying up and reconciling against.
Absolutely. So if you're working with a bookkeeper that once a month is sending you a list and says, can you send me all your receipts? Can you send me all your invoices and things like that? Then that's not really fit for a 7-figure business. You should be literally going live throughout the month, and then it gets to the end of the month and you might do a tidy up. Yeah. The only time that I would say is slightly different is a lot of businesses have a CRM platform or something external that does all of their sales invoicing. So if people use Stripe, go cardless, maybe a CRM or a platform that's producing sales invoices for your customers, then it might be relevant that you only input that into your finance system once a month.
Okay. Got it. Great. So efficient bookkeeping, number 1.
Number 1, first step.
Number 2, second step.
So this is the piece that is consistently missed by nearly every business that we work with, and this is accounting adjustments.
So what's an accounting adjustment, Claire?
So if anybody's listened to our podcast around the month-end checklist, this is essentially your month-end checklist, and you're going through the month-end checklist and looking at every number that's in the accounts. You're looking at every number that's in the P&L, every number that's in the balance sheet, and as an accountant, you're trying to understand what's missing, what's in there and shouldn't be in there, and what's a mistake. So as an example, we would look at things like accruals. Now, accruals would be where we know that you've had a cost for something, but maybe your invoice hasn't come through yet. Well, we'll put an accrual in so that your accounts reflect the true situation, regardless of whether you've had an invoice or paid for something.
And what is an accrual? That's accountancy speak. So what does that actually mean?
Essentially, we're putting like a dummy invoice on the system so that cost is recorded in your profit and loss.
Right.
So, for example, if you've recruited somebody in January and they've started and you've got a recruitment fee of £5,000, but the recruitment company doesn't bill you till March. Well, that recruitment fee should be in your accounts in January, shouldn't it?
It should be reflected as a true cost in the business in that month.
At the time that the benefit occurred.
Okay. So it's you making sure that appears in the P&L at the right time.
Yeah, absolutely. And then a big part of what we would be doing is prepayments, which is often when you pay for something up front. So the classic examples here is when you get like annual or quarterly bills, so like a quarterly rent bill or an annual business rates bill, annual insurance, that type of thing. And what we typically see, bookkeepers will post it into the accounts in one big lump sum, and we'll spread that over the time that relates to instead.
So that's a bit of the how. I mean, going back to your recruitment bill bit, I guess the question is, why does it matter? Like, so if I'm a business owner and I'm not doing that, I'm just whacking, the invoice came through 4 months down the line, whatever else, I just put it in that month at the moment. So you're saying that we should do that, but why should we do it?
Because what you're going to get is if you just put all of the costs in as and when the invoices come in, you're going to get these big peaks and troughs in your profitability and in the different ratios that you're tracking. So you're going to be looking at your accounts, for example, and say you get an insurance bill in January, then in February you get a quarterly rent bill, then in March you get your business rates bill. Like, all of a sudden it becomes quite difficult to actually understand what month was the most profitable. What month did we do the right thing? What month did our business work optimally? And that's why we really need to do that, because otherwise you cannot get clarity from your numbers, because you've just got these big lumpy bits in your P&L that are not really reflecting what's happening. Because what happens if you switch to paying your insurance monthly instead? All of a sudden you've got like this significant change in like a process that is going to have a material impact on your accounts and make it impossible to compare one month to the next.
I guess it's no dissimilar to why somebody doesn't go out in their personal life and buy a £25,000 car. Instead, they pay £200 a month for the next 5 years, because it smooths their finances out and makes everything manageable and, from that perspective. And business is no different, is it?
Yeah, absolutely. So as an accountant, so accruals and prepayments are just like two of the things that we do. Typically, we've got a list of about 15 different adjustments that most businesses require. Some of them are quick, some of them aren't. And it's a case of just going through that and making sure that every number is reflective of what's really happening in the business that month. So we're trying to capture the true income for the business that month. And because I've just talked about accruals and prepayments, but it might be that if you're a business that does sales contracts, say, for example, you take 12 months up front from your customer, but you're going to deliver a contract over the next 12 months for them, or 6 months. You don't want all of that income shown in 1 month.
No,
Because then you're going to have a really high income in 1 month, but actually you've still got work to deliver for months to come. So, it's not just your costs that we'll be looking at, it's your sales that we'll be looking at. So we make sure that the costs and the revenue are in the month that they relate to. And therefore we can really look at the performance of the business and understand profitability.
So how would you deal with businesses, that's a good one, that take really large deposits really early on before they deliver services? How would that be dealt with? Like wedding venues, if they took a 50% deposit 2 years before they're delivering the service, is there an accounting way to deal with that?
Yeah.
How would you manage that?
Actually, you shouldn't be seeing deposits in your revenue at all.
Okay.
Is the answer to that. So if you are a business that's taking deposits, you shouldn't see that hitting your profit and loss. You should see the invoice at the time that you've delivered the service to the customer. So if you deliver, if it's a wedding and it's a 1-day event, you would expect to see sales recorded in the month that the wedding happens.
Yeah.
Or if you are delivering a 12-month service contract, for example, and you've taken a deposit up front, you would expect to see the income spread over that 12-month service contract.
And presumably that deposit just sits on the balance sheet.
Yeah,
and then
absolutely. And then drawn down, as it's used. So other adjustments that typically we would be doing as well is looking at like fixed assets, making sure that all your assets are recorded correctly so you understand what you've got and they're depreciated correctly, because of course that then impacts your profitability.
Yeah.
We check to make sure that all of the expenses that have gone through your account have been classified correctly for some of the more tricky accounting technical stuff. So for example, like legal expenses, travel and entertaining expenses, the tax law around that can be quite nuanced. So it's quite important that you've got everything categorised correctly. And most bookkeepers are not very up to date on that sort of information. So typically an accountant would review that.
Yeah.
And then also really importantly, we'll be making a tax estimate. What do we think your tax bill is going to be?
Yeah, so you can start to prepare for that bill as well.
So you can start to prepare. So VAT bill, but also corporation tax bill, because a lot of business owners only find out what their corporation tax bill is going to be at their year end. But really, you want to know on a monthly basis.
Perfect. You mentioned at the beginning of this something about a month-end checklist that you have, which I know we've talked about previously. Yes. People listening today might not have listened to that episode. How can they get a copy of that if they want it?
Probably the best way is just drop an email to marketing@profitcashgrowth.com and we'll come back to you. I believe there's a download on my website. I'll double check that. And if there is, we'll put a link to that in the show notes as well.
Otherwise, just email us and we'll whiz a copy over to you. Perfect. So that's number 2. So let's move to number 3. Step number 3, Claire.
Okay. So when we get to step number 3, so we've done all of the adjustments, we've got all of our bookkeeping finished, and we're now happy that our financial data is where it should be for us to produce a set of management accounts. And now it goes to that system bit where we're going to literally run a report on the system.
So this feels like you're like building the foundations before you start building the wall to start building the house. So it's like all of our foundations are now solid. We can now run a report that we can trust the data from. Is that kind of the analogy for it?
A little bit, but I'd think about it slightly differently. I'd say your bookkeeper does the foundations, your accountant builds the wall, and we're now putting the roof on.
Okay.
But what we find happens with a lot of businesses that come to us is that they've got their foundations with their bookkeeper and they're trying to put a roof on and there's no walls in place. And that's why the roof keeps falling off.
Okay, got you.
So we're going to run the accounts and we're going to actually have a look at your profit and loss, your balance sheet, your cash flow. But also, what I think is really important here is that I personally don't work with any business that gets the same set of management accounts, i.e. the same format, the same numbers reported to them for 12 months of the year.
Yeah.
Because a business is changing and the numbers that a business needs to track should be evolving too.
Yeah, at different stages, depending on what they're doing or what their next challenge is. Therefore, what that set of numbers really needs to focus on.
Yes. Yeah. So generally what we prepare for clients is we will have a standard monthly set of information. This is the fundamental information that every business needs to run properly on. That's going to be your profit and loss, management accounts, cash flow, things like that, tax provisions, all of that type of information. But then depending on where your business is, what you're going through, what your focus is, what you're hoping to achieve, what your goals are, all of that will then define what supplementary information we provide to you.
Okay. Right.
And for some businesses, that supplementary information changes on a monthly basis. For others, it's quarterly. Others, it's maybe annually. It really depends on what's happening with your business. And I would suggest that it's that supplementary information that drives probably the big changes in a business. Mm. So as an example, we at Profit Cash Growth, we have like a quarterly schedule that we go through. And we might say that on quarter 1, we're going to analyze every business's marketing.
Yeah.
And we're going to do some ad hoc analysis and we're going to pull out some really important key pieces of information that we find in their data. And we're going to summarize that and share it with the business owner in the board meeting. And from that, it might then spore this little project that somebody takes on to do something like implement a new system or reach out to a new group of their audience that they're not contacting already, something like that. Or it could be another thing that we might look at. We might look at, I don't know, some of your key suppliers. So, quarter 2, we might say, let's analyze all of your different suppliers, what you're purchasing from different people and see if we can consolidate some of that and get better rates from your suppliers, build partnerships, etc., etc.
So you've got these like project pieces to do with numbers that are floating in and out of the business on top of the foundation of the management accounts that are
Yes.
consistent month in, month out. And that allows them to go like deep into certain areas of the management accounts in a different way, or cut the numbers in a different way
Yeah.
to deliver different decision making and smarter decision making.
Yes.
Yeah, got you.
Because, you know, looking at something like your customer retention, for most businesses, that's going to be quite important on a regular basis. So you're going to want that sort of information all the time. But looking at your top 10 suppliers, for a lot of small businesses, that's not going to be important on a monthly basis. So to have that sort of information in a board pack is probably overkill for a 7-figure business. But on an annual basis, let's have a look at who your top 10 suppliers are. Do you know who they are? You know, can we get better rates from them? How do we increase the service level that they offer to us? All of those types of things.
This feels very much like it's like you're being creative with their numbers and taking to them these different ways that you're cutting the numbers at different times to go, you know, you don't need this on an ongoing basis, but would this be useful? Let's have a look at this. And they might go, yeah, it's interesting, but I don't think it's going to serve in the long term. And then you give them something else, and then they go, oh, actually, that's a number that that will really help us drive our business forward. Can we have that more often? And and you get those different things.
Yeah. And sometimes, like you say, sometimes we don't get it right. Sometimes we provide them something and they're like, no, you've misunderstood this bit of our business. That's like that because of X, Y, and Z. Fine. Then we've built our knowledge. We can tweak it and we can think, okay, well, that's not useful, but this might be. And that's essentially what the role of a finance director is in a big organization, is you're providing information to different departments all the time to say, hey, did you know about this? Hey, did you know about that?
But it's all driving strategy, really, isn't it?
Yes.
Because it's very strategic in the way that it's being provided, and it's driving, you know, hand in hand the strategic decisions of the managing director of that business, isn't it?
Yeah,
so,
absolutely.
Got that. Great. So there's the 3 steps. So what's the 4th and final step, Claire?
Oh, this is the step. There's no point doing 1, 2, and 3 if you're not going to do number 4, and that is to simply take action. You've got to do something with the information that you're getting.
Yeah.
And this is probably where most people fall down. Firstly, bookkeepers and accountants are telling people what's happened.
Yeah.
And that's useful because it's very important that a business owner can interpret the information that's sent to them and that they can understand what it means. But really, as an accountant, you should be saying, this is happening and this is what we recommend you do.
Okay.
And then a business owner can get that report and they can have a look at it and say, yep, I understand what's happening. I agree with your recommendation. Now I'm going to make my team deliver it.
Yep.
Because as much as I would love to go and work in some of the businesses that we work for because they're very exciting, we can't do it for you.
And you only take the horse to water, as they say.
Exactly.
Yeah.
So it's the most important step is to make the right suggestions. So you really need somebody that understands your business, understands your industry. You need to go and take those changes and monitor the outcomes.
Yep.
So that's where we sort of work hand in hand with the businesses, is we know what actions they're implementing. And then some of the ad hoc reporting, that would be where we'd then say, okay, look, we know you're implementing this in January. Let's have something in the board packet for the next 3 to 6 months to see how it's going, see what the results are, see what the outcome is, what numbers is it driving.
Yeah. And this is fundamentally how, you know, all big businesses ran. You know, you go through those accounts, you make smart decisions and action plans from it in the board meeting, and then you review those in the next board meeting. You come up with some new ones, and hopefully you've achieved some of the others that you reanalyze the numbers, test, measure, and come back round again.
Absolutely. Yeah. So we use PDCA, so plan, do, check, act, and it's like a big loop.
Yeah. Brilliant. Thanks, Claire. Well, the 4 steps there: efficient bookkeeping, number 1, accounting adjustments, number 2, prepare your management accounts, number 3, and take action.
The most important.
The most important. Lovely. Well, let's move on to this week's Profit Cash Growth Extra. So this week, Claire, I'm going to do a book recommendation just because it ties in quite nicely, I think, with the management accounts piece that you've just discussed, because actually I think this book probably complements it quite nicely. It's a book called Traction by Gino Wick, and I read it last week while I was on holiday in Malta. And this is a really interesting book because it's actually aimed, you know, real good sized business. I would say probably kicking 8 figures, not just 7 figures here. You need to be at the point in your business where you're starting to build that senior leadership team or that middle management leadership team. it's a really, really interesting book to help take people from that small business mindset to all the way through to the very big business mindset. And actually, I think the book itself really complements some of the structure that you've discussed today around the steps for, powerful management accounts. And you can absolutely be assured that the type of companies that would read this book are exactly the type of companies that will be delivering on that. I think there are parts in the book that talk about, those board meetings, how to, take the right actions, and there's a lot about accountability in there, and how to, apply the right accountability against the right pillar or leader within the business of each of the various departments and organizations. And I think the management accounts really sort of leads into it. So I found it a really, really interesting book. It's a book for people that who are really scaling and really want to get ahead of how to structure everything from the values and the leadership through to, the nitty gritty of what they should be doing in those board meetings and how they should be managing that leadership team moving forward. So it's a real good one for somebody who's an MD who's trying to really build their own knowledge of becoming a powerful leader. Yeah,
I think don't wait until you're at that point where you're ready to implement the stuff in the book. I think it's a fantastic book just to read and have that awareness, especially if you don't have a background in big business. So if you haven't come from the corporate world or something like that, then
it'd be an absolute eye-opener.
It would be a big eye-opener and quite fascinating to read. But we were in a meeting with somebody else this week and they described it as like a toolbox, didn't they? And they said it's like a bit like a toolkit of literally almost like a step-by-step guide of how to
really
implement it
like
in your
that.
business. It's really, really good and really easy to take actionable steps from.
Yeah, that's it. So that's Traction by Gino Wick, and there is more books that he does as well around that subject. So thanks for joining us for another week's podcast. Hope you enjoyed that. And if you feel like you may have outgrown your current accountant and you'd like Claire and the team to have a look at your accounts, or you'd just like to have a little chat about where you're currently at and how they may be able to help, pop over to the website profitcashgrowth.com, or just drop us an email, marketing@profitcashgrowth.com, and do have a listen back through the whole back catalogue. And if you could just pop this particular episode, maybe you've got a business mate who doesn't even do management accounts yet, let alone do them right, just pop it over to him and say, this is something you absolutely need to be doing, and we're going to see you again next week.